we get that amount. And the only reason we may not be able to get that amount is if we do not maintain our power plant and therefore it's not available. But as long as we make it available, that amount is assured to us, because it's like renting a car. When you rent a car to somebody, you say that's the fixed amount. I'll pay to you as long as I have it, whether I use it or not. So that is what we call the capacity revenue. And you can see that it's increased from 19 to 21. Then we have the energy revenue that, and this now is like the running, what we are paid for running the power plants. So like when you see the energy increasing, then that amount also goes up. So that depends on how much our power plants are used. And then there's the forex recovery, and this is something because of being a regulated industry, and because our power purchase agreements are in Kenya shillings, but we have loans, and also we buy our spare parts abroad using the hard currency. So what the regulator has done is to include a formula in our power purchase agreement that allows us to not suffer from the exchange losses. So our power purchase agreements, for example, the ones we signed in 2009, the exchange rate to the dollar equivalent was about 65 Kenya shillings. Today we are at 100. So if it was assumed that we will be paying our loans, the dollar loans at that basis, today of course we are paying more in terms of Kenya shillings. That is why we have this component here. And it's also a component that you see in your power bills. You find the forex adjustment, and that's what it covers. So it is really a hedging for us because of the nature of agreement. So the total electricity revenue, therefore, increased by 15% from 25 billion to about 30 billion. And then there's what we are calling the, the steam revenue. And this has to do with the fact that at the geothermal, we have two things. One, we have the power plant itself that generates the power, but we have the revenue, the steam, which is the fuel that powers that geothermal. And we are looking at that separately, because if you look at it equivalent to a diesel plant, which is powered by the diesel, then you want to separate the fuel, which is the steam, and the revenue that you get from there. It's a pass-through cost to power consumers. And in the PPAs that we have, particularly to the recent geothermal plants, and this is basically the 280 megawatts and also the wellheads, we have separated the steam revenue. And we expect that as we continue, you'll see this figure rising as we develop more geothermals. Then we have other income, and John may go to the details of that, that went up from 66 million to about 2.2 billion. And so the total non-electricity income moved from 4.4 to 9 billion, quite a big rise, and giving us an EBITDA of about 26.5 billion against the 17.8 that we had last year. So you can see that that figure there, again, is a very good movement of about 49%, with quite a good margin. If you look at the margin, last year was about 59, this year is about 69. And the EBIT moved from 11.3 to 16, and John will give the details of that, a 43% rise. The profit before tax from 8.7 to 11.3, a rise of about 30%. Now, the number here, and this is a number, that you read in the newspapers, highlighted the profit after tax. This was a drop from 11.5 last year to 6.7 this year. And there's a note here, but I'll probably not go through that, because in the next few slides, our Finance and ICT Director will be coming to give the details of that and the breakdown of it, because that is where really most of the questions are. And probably by the time he's finished, the questions you prepared, you may not ask them, but I'm not saying that you should not ask. But I think he has a very detailed explanation so that you'll be able to understand why the figures have changed the way they have changed, and hopefully to know that there is no worry about you investing in KenGen.
Investors, funds managers, directors, distinguished guests, ladies and gentlemen, it's indeed a great honor for me to again stand before you and just try to explain what's happening in our company. Thank you so much. Albert has taken us through the top line, so mine is really just to kind of give the background information around this. I think you'll agree with me that at this time in the history of all over the world, whether you're looking at the East, you're looking at the West, you're looking at the European markets, equity capital markets, not very many companies are doing the way we are doing. And this is the promise that we gave and we continue to give. It's the assurance that we continue to express every day, and it's the confidence that we as management team have in this company and in the future. And indeed, I really feel honored at this time and age in history of this country to be a finance director that can be expressing this kind of numbers. Revenue growth of 29%, from 29.9 billion to 38.6 billion. Have a detail behind that, and definitely what's driving this, as we've said, is that this company, we are trying to diversify our revenue base. Many of us, we are called Kenya Electricity Generating Company, which means we are a generating company, but and later Albert will be taking us through the details of that, we are trying to see how we can diversify our revenue base. And as you diversify revenue base, you mitigate your risks, and you give yourself an opportunity. If one thing doesn't work, you're able to compensate. And this is why we are seeing the top line is showing an upward trend. That green arrow going up is really a good thing. It's not many times in my life I've had this kind of graph before me. And those who appreciate numbers, EBITDA, and this is really what measures how the company is doing. Earnings before interest, tax, depreciation, and amortization. Interest, something that's outside there. Tax, something you may not have a lot of control over it because it's really illegal. Depreciation depends really on the investments that you have in your assets. But those earnings is a measure of how how the company is operating, and that's grown by 49%. From 17.8 to 26.4 billion. Profit before tax has grown by 30%. Again, from 8.6 to 11.2%, from 11 to 11.2 billion, from 8.6 billion to 11.2 billion, a growth of 30%. Many organizations getting profit growth of about 20% is not easy. Being a regulated sector, we all know that our return on equity is much lower than that. So where is this coming from? It's coming from other diversified sources. Profit after tax sadly had to drop, but we operate in an environment. The government has to get its share. Last year, 11.7. I think we all know, and we've said this before, that we operate in a country where there is an incentive, what we call the investment allowance. Any investment done outside the capital city of Nairobi, Mombasa, and Kisumu, the major cities, attract an investment allowance of 150% in the year that the project is commissioned. It's not only KenGen, it's anybody, any investor that comes to this country and invests in the rural environment. Of course, that brings a lot of advantage to the country, and that's the reason why there's that provision. It opens infrastructure, creates employment, and it kind of diversifies instead of everything being in the capital city. So in the wisdom of the government and the makers of the law, that incentive is there for investors. And because of our projects being outside the cities, we do gain 150%. Last year we commissioned 280 megawatt plants, and because of that we're able to benefit. And it came in, there's a 150%, so the 100%, I'm trying to divide 150 into 150 so that I can explain. 100%, that one you have to make a provision, comes what we call a deferred tax. But 150, the 50% component becomes a permanent credit, which you gain, and that goes to the bottom line in your P&L. So last year we had actually a credit in our tax account. But this year, because we have not commissioned a plant, a project, we did not have a credit. The 50% component wasn't there. even though the tax we have provided doesn't really mean that we have paid that tax out as cash. It's a deferred tax provision. The total tax that we paid out in the year was 186 million, mainly on withholding tax and interest on other sources of income. But we had to make that provision, deferred tax accounting, for future tax, because you're really something you'll pay later when you start making taxable profits. But the 150 didn't come this year. When we commission another year or two, it will get another 2 years or so. Again, we'll get a credit. So that's really what has caused that change. Last year was a credit. This year, it is a tax charge, which is a provision. It doesn't really mean we paid out cash, but we had to make the provision in our accounts. Now, this is analysis of the breakdown of income, and that's what I'm talking about, that revenue is becoming increasingly diversified. Because for a long time, we really have depended on electricity. It's still the main component. Electricity revenue still remains the main component, which has the capacity that Albert has talked about, and energy, and a bit of forex. Still remains the main component, but that has also grown by 15% as a result of the 280 megawatts full realization of the benefits of 280 megawatts and some of the wellhead units that we did commission in the year. But we also, and you can see also that, so this is the capacity and this is the energy. And you can see this other income, which is coming from steam revenue. And this has grown from 3.6 billion to 6.8 billion, a growth of 86%. Now, this is part of the diversification. KenGen has invested in the steam, in wellheads. We haven't actually utilized the full potential. As we speak today, we have enough wells and enough steam to do our next two projects. They all carry 5, which again, we're going to be telling you, Albert will be telling us towards the end about the future projects. And that's, we already have full steam. So we're not going to put any more money in terms of steam for that plant and the next one. Any investment you put in steam is for more longer term investment. But we have that already, that when the next project, which is Carrier 5, comes into line, we'll actually unlock that revenue. And on average, we get plus minus 3 US cents per kilowatt hour of the steam that we sell. And that's how you're going to see this line growing immediately we commission new plants. Then we have other source of income, and here is also, it didn't grow as big as we anticipated, but there's potential. What we're doing again is, and again I'll be giving a more detailed analysis on that, is that we are thinking of other things we can do. We have skills and capacity within KenGen. We have people, human capital, that have got enormous skill in this continent and world over in terms of geothermal technologies and skills. We have hydrology, hydropower skills. We have got wind skills within a company. So, and we also have equipment. We have rigs. We have equipment that we can use for doing studies, seismic studies, all those kind of studies. And we felt when we are not using it, is there capacity that we can sell out and make money? And you're going to see this. So part of this drilling and consultants that are coming in. And again, later you'll see in terms of strategic positioning, the direction we are going. So this is why you see the top line has grown from 29.9 to 38.6. Now, coming back just to electricity, this historical is just based to tell us how much are we making per megawatt? How are we gaining? And this is part of the benefit of geothermal. Because geothermal has very high yields, you're able to get over 90%. If you're talking about hydro, you're somewhere, depending on how the rains are and everything else, 60 plus, 67%. If you're talking about wind, you're talking about in the 30s, 40s range. But if you're talking about geothermal, you're able to get a lot more per megawatt that you invest, in addition to the steam revenue. And as you can see, what we've done here is just the turnover for the year. You divide by the megawatts, and you can see it's growing. So that is, again, adding to the bottom line. Now, looking at other non-electricity revenue, what are some of the questions that we have? And you can see here, this is the steam. And as I said, this is directly related to new projects and generation. So as we increase power plants, geothermal power plants, this will be growing. But we also notice that the opportunities outside generation. We currently beginning to do some business in some of our neighbors, flower farms. They need steam for heating their greenhouses. They also need steam, some of them to generate their own little power there. And this is opportunity that we are going to do because we are able to drill the steam and sell to them. So that's that line there. And then this is something to do with drilling as a commercial drilling. Again, we benefited from that, and we think this is an opportunity. We are bidding now anytime there is, because we have 3 rigs, anytime there's an opportunity, whether it's in geothermal or it's in oil, we'll be putting, we've got powerful rigs that can go up to 4 kilometers. And we have got the technology and the technical skills. We've got powerful, well-trained, experienced drillers from manager to technical team. So these are the areas we are able to compete very competitively, not only in Kenya, but in the region. And that's an area that we see, of course, these are small things that come in, insurance and miscellaneous income. I'll put this waterfall just to give you, in a waterfall format, the revenue and how it's gone and where we have ended. This is the breakdown of the revenue by source. Operating expense at just shy of 9 billion. Then steam costs are 3.1, so that's the net. The depreciation 10.2. This went up. The reason this went up is because of revaluation of assets. Last financial year, all assets were revalued, and the asset value went up around 77 billion, which we took into the balance sheet. Because that's really the market value of assets. Of course, this helped a bit in boosting the equity part of the balance sheet, but also it brings the real value, but it's the impact of increasing depreciation. So when you see the bottom line here, part of it is that number has grown significantly because of that revaluation. The net interest expense is basically the interest that we pay, and then profit before compensating tax is around 13.6 billion. Then compensating tax of 2.4 billion. I think I need to explain this and I have a separate slide, so I'll take us through that in a more detailed manner. And then leaving us with 11.2 as profit before tax. And then of course we made a provision of 4.5 billion, which goes to the government of this country. But as I said, this is not really cash outflow. It's a provision, an income tax expense provision in respect of deferred tax that we pay, leaving us with 6.7 billion shillings, which we have retained in the company. Taking us through our balance sheet, and we try to compare last year and this year. There's a number of things that one will see from this is a share premium and equity has grown from 10.5 to 36.6. And this is, we want to thank you and the government for supporting us in the rights issue, and that has created that growth, which means that we now have more better. As we speak today, our debt equity ratio have got debt at 44%, at 44% and equity at 56%. So really, we have a situation where we have got debt lower than the equity in the company. So that gives us room to be able to invest even as we move forward. Non-current liabilities, and I must say there's 40 billion here of deferred tax, which is where that provision on tax goes. So increase this, so 176, which is long-term, has a deferred tax of 40 billion, which basically is a provision. So that means that the balance sheet is much more healthier now than it was. And if you look at the cash, this is the movement of the cash. We started the year with 3.2 billion. We did spend 29 billion investing. Again, this goes mainly into capex. This we generated this, and then this is the net that we spent in investing. this cash that came, part of it includes the net after taking account proceeds from the rights issue. I must say, at the end of the year, the only cash that we had in our cash book from the rights issue was 4 billion, because some of the investors that had their letters and guarantees, they paid after a year on the second. So we only had cash 4 billion at the year end. And of course the government was conversion. But that means that if we had received all, this could have been much more different. But we closed the year with 6.7 billion shillings cash. Now, talking about tax incentive, just to explain to us, whenever we invest, and this has been the historical, whenever we put a plant, we always get some tax incentive. So this is a tax charge and this is a tax incentive. So depending on whatever investment we do, you either have the tax incentive and a tax expense. For example, here it was a negative because it was a tax credit because the investment was quite heavy when we invested all this. In the year 2014, we got 5.2 as tax incentive. That's the 50% I was talking about. Kindaruma is in Eastern Province. Sangoro is in Kisumu, is in South Nyanza. So being outside, we were able to get a tax incentive. And that year we get a tax credit. This year, Iguru, which is in Naivasha, it was a small plant. We got that tax incentive and we had to pay a little bit on our PNL. 2015, which is last year, we had a big tax incentive, 70 billion, and we had a tax credit of 2.8. But of course this year, we have not commissioned, and therefore we have, that has to reverse and we have to take into account the tax scheme. So that's really how it happens, and this has been going on. I think it's been, because the numbers were very small then, maybe we're not noticing them, but this year is this was quite heavy. Now, compensating tax. Now, how does compensating tax work? Compensating tax is a tax, it's quite a silent tax. Not many people know about it. I think to introduce either in the 80s or in the 70s, I think maybe the 80s, that its objectives, where you cannot be, if you're making a tax loss, you cannot be paying dividend. And if you pay dividend, the government would want to get. What happens is that every year you have a tax account. When you pay interest, in fact, if you pay tax in that year and you declare dividend, the amount of dividend that you declare, the way we compute compensate tax is you check it to test whether did it compensate for the tax enough. So you do the dividend declared times 30 over 70, which comes around 42.86%. So you compute the tax and compare with the tax you paid in the year. The tax you paid on the year is netted off from that compensating tax. If it's negative, you make the difference. If you paid more than the compensating tax, you pay nothing. It doesn't come into, it's not triggered. Now what happened here is that in this year, and just giving history again, this year we really didn't have to. It did come into play. No compensation tax, as the income tax paid exceeded the compensation tax on dividends paid. So when we tested, there was nothing paid. 2013, we had to pay a bit. Paid dividends of 1.32 billion. We gave shareholders 60 cents to shareholders triggering a compensation tax, and we did pay that small tax credit, compensation tax. 2014, KenGen paid dividends of Kenya shilling this billion to the 30% shareholders. Now, from here up to here, really, what caused this is the 70%, and this has been accounts and has been notes in our accounts, the 70% that was the 70% component of government dividend was not physically released to them since this period. And the reason is because we had invested some money on behalf of government. Again, that was also appearing in accounts receivable, money receivable from Ministry of Energy. We had invested money, and the government was supposed to refund us to support the geothermal, and that had taken, and this was causing a bit of cash flow issues. So we said the money that is due to us and the dividend, we were holding a bit on that period. So we only paying minority shareholders, even though we're making the full provision on the component that relates to government. At one time, we actually agreed to net it off, and we set off the account. But again, it was said, no, it can't be done. You cannot set off money that belongs to government, must go to government the way it is. So this year, we agreed at the end of the year, financial year, and the government paid us all the money they owed us. They paid us everything, and we also paid everything that we owed them. And that triggered the compensating tax, because the dividend, the compensating tax on the dividend that had not been physically paid to the government, when it went through the tax testing, it was found that it triggered